All right, ladies and gentlemen, I hope you had a wonderful weekend. Last week, we had a ton of data, but the focus was primarily overseas. This week, it's going to be all about the United States and the Fed, and we will be hearing from Jerome Powell on Wednesday. But now, there is a kicker to this event. It will be including the summary of economic projections. This happens once every 3 months, so this FOMC meeting, it very well may be the biggest of the quarter. So, Chad, we have a lot to talk about. I have a breakdown for you. I'm going to go over the main things for the Fed. We will be talking about this every single day leading up to the event. If you saw how last week played out, we were talking about the ECB and the data, and every single day leading up to it, we focused on one element. We will be doing the same thing here for the Fed, but there are things we need to address. So I'm going to go over that. I will go over a couple of the other events. I might as well just tell you now, you are going to hear from other central banks. This is where the rest of the week becomes very important because we're going to hear from China, Bank of Japan, Australia, and like 5 other places. I think even Brazil over the weekend, you even got an update out of them, but this will be the other data we get, and then there's going to be PMI data, and that has the ability to move things. If you remember this chart that I showed you the other day, there is a reaction for this data. The only difference, I think we're getting the S&P data this week instead of the ISM, but for the most part, all eyes will be on Jerome Powell. There will be a couple of elements relating to both oil and China that will be important, but now it is the week of the Fed, and this will be a very pivotal meeting into the end of the year, and let me explain why. But before we do any of that, I need the thumbs up on the video. I need to make sure you're subscribed, and if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/thestackmarket. We will have all of this stuff live, Powell live, the interpretation, any other data, and I'm sure the market will be crazy leading into all of this. And today is Sunday, tomorrow is Monday. This is the random account generator, and what we need is your help. Today is Sunday, tomorrow's Monday. I already told you that, but what we need from you is to post a random option trade in the comments below. Keep it below $100. Post the strike price, expiration date, all that good stuff. And tomorrow morning, we are doing a random comment picker so we could get this portfolio going. So we need your help, baby. So let's go, Chad, and hope you had a good weekend. Get ready for Monday. Run it.
It's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
All right, off the bat, ladies and gentlemen, as far as getting into Powell and what we expect this week, there is 2 things that we need to be looking at. Number 1 is the actual SEP, the summary of economic projections, and the big factors that the market will be looking at, and then 2, the current Fed futures and where the first rate cut is priced in right here, right now. So those are the 2 big things we're looking for, but I will tell you there is a broader theme of this week, and that has to do with how long Powell is going to keep these rates high. What people are looking for, we are not expecting a dramatic movement in the rates, but we are looking for answers, and we are looking for the summary of economic projections to give any clarity into whether Powell is going to be holding these 5.5% rates for like a couple weeks, a couple months, or are they really going to do this for a year or maybe longer? And that's why we have to look at these 2 things. So let's start with the first one. I want to take you to the good old summary of economic projections. If you ever go monetary policy, meeting calendars and information, it'll take you down to the meetings. And like we said, every 3 months, you'll notice something that says projection materials. That is what we will be looking for on Wednesday. So if you go to June, that was the last time we got the SEP, and there was changes, and I do believe there was a market reaction, but I think this was the biggest FOMC meeting in the last 3 months, and the other ones were kind of a dud in the sense that we would move around a little bit, and then there would be follow-up news or data elsewhere that the market was really responding to. So like I'm saying, this week, this should be big, but this is how the SEP looks, and what we want to look for is 2 things. 1, the federal funds rate projection. Right now, or at the last meeting, it came in at 5.6. In March, it was at 5.1. Why you should be looking at this and what is important about this, the current interest rate is 5.25 to 5.5. So technically, the current interest rate is below the median where the whole Fed thinks that everything will end in 2023. That's why tomorrow, if they adjust this and it goes lower, this could be good because it could solidify a pause. If this stays in at 5.5, I'm already thinking that Fed's going to stay there. A lot of people on Wall Street are. That would be a good sign. If that number goes higher, just like any of the other times, people will not like that at all. But that's not the main thing, because not only is there 2023, we're almost done with this year, you also want to be looking at 2024. If this goes higher or lower, that will tell you a little bit more into the intentions of the Fed and Jerome Powell about how much higher for how much longer they want to keep rates at. So the dynamic of these two, it's one thing about 2023 that goes lower, confirms pause, that's going to be great. If that goes higher, people might get worried by the end of the year and be on the edge of their seat. But also, if this comes in chill on 2023, whatever happens on the projections of 2024, we're close enough where that can start moving things and even the Fed futures. So this is the first big thing you want to be looking at this week on the SEP. The other thing is going to be the unemployment rate, especially, I would even say the GDP with all the data we've been getting, but unemployment, remember, we have recently saw some weakness. If that persists and if that is shown by the Fed, that can give us an idea, but hopefully the relationship between unemployment and rates and their projections kind of work with each other. Otherwise, we're going to be looking at one part of rates and then the unemployment picture may not make as much sense. But these are the big things we are going to be looking for. Like I said, coming into it, as we get other data and other countries' data leading into it all, maybe people are going to start focusing on other things, but these should be the two main narrative topics into the S&P that we should be watching this week. So that is number one. But now number two, we got to go to the Fed future. So hopefully you're familiar with this chart. If you're not, that means you have not subscribed to this channel over the years, because we have showed you this a lot. Again, this is the Fed futures. It's letting you know where people are buying on the Fed futures curve, pretty much insinuating whether there's going to be more rate cuts or if rates are going to stay the same. Usually 60% or higher, the Fed has always followed along with it. But what I want you to see here now is when the first rate cut is priced in, but more so, I want you to just notice a little bit more about what we're getting into for this month and this meeting, and you could see how this meeting on Wednesday could be very, very pivotal. And even for you, like I'm talking about, these odds have been around for a while, so if you want to know what the market feels about rate cuts or rate hikes, this is always the best place to look. But you'll see coming into this meeting, nobody is expecting that Powell is going to raise rates. Remember, the last time we heard from Powell, it was a hawkish pause. Now we're going to be getting a clear-cut pause, multiple meetings in a row of not raising. That is what we're looking for, and that's what we're expecting. But now you come into November, you'll notice you're above the 60%, but it gets a little lower. Still pretty much expecting that rates won't move by November, but slight chances of still pricing in that one more hike, because remember, one more hike, even on this year, if the SEP on Wednesday does not change, one more hike would put us in that range. So that's why I come down to December, you'll notice it's right at 60-40. So this is the first part of the Fed futures I want you to notice. Depending on what happens at this meeting, yeah, we are expecting a pause in other things, but hopefully Powell doesn't do the wrong thing, or if he wants to keep it like this, essentially one wrong word at this meeting, we could instantly begin now flipping the balance by end of the year and pricing in another rate hike for the next two sessions. So that wouldn't be as good. But that's the first thing I want you to notice. But now, as you go through, look at as the odds change and where we expect the rate cuts to happen. So you'll notice even by March, most people think rates will still be 5.2 to 5.5. That's where we are right now. Go down to May, you'll notice there's a couple of percentage points below it, some above. This is where it gets shaky. But now here is your answer that you need. It is around June where some of the first cuts are priced. Some are even larger than not, but you'll notice now there will be 60% below where we are at right now, and this is what the market is looking at. So depending on the SEP for even 2024, and depending on what we do right now in the short term, these are going to be the moving parts. It's pretty much, okay, where are rates going to be at by the end of this year, and then the first 6 months of June or 2024, people are expecting some level of rate cuts. So that's or at least where the Fed curve is at. That's why this meeting, we want the answer how much higher and for how much longer. These will be the clues people are going to be trying to sniff out. So that's the breakdown. Like I said, I will have more for you as we get through the week, but even this alone, I hope it helps you out because by Wednesday we'll get the reaction and then we'll see how everybody else responds because remember, last Friday was a big expiration, so maybe we may move big into the end of the year, but let us get into the plays. So, right off the bat, I got a couple plays. I was butchering at the end there, man. There was a lot going on, but I do think we have a couple of different opportunities. Obviously, there will be an opportunity with the Fed. I will even tell you I made the rollover on the Japanese yen on Friday, and I'm considering adding more. But here's the thing. There's a BofJ decision as well this week. Again, even the United Kingdom and a couple of others. So you're going to get all these plays. Everything from last week related to the dollar, the markets, anything going stronger, getting weaker, and kind of breaking out there. That is something that we got to be watching. But now, as far as any other plays, kind of more company individual related, the first one I want to bring up here is oil. So I have USO on the chart. You can see it right here. We're still in Oxy from like a year ago, and that play's still up or finally up, and we've got dividends on it. But the thing is now, oil is at a very precarious spot. We've been bringing this up. We keep talking about rates. You're watching the data, bro. I even saw $7 gas while driving. That actually blew my mind. That was over this weekend. That was literally yesterday, but we've been bringing this up and everybody's been talking about inflation and how important it is, and the simple answer right now is that you should be watching oil. Just like the market is up this year and a lot of people didn't expect that, the same exact thing can be said for oil. I had to make a better chart. I was all over the place. I wanted you to see the dates, but this has been a very big deal. Even $92, if you remember on the way down for oil, we've talked about how important that level is. Same thing applies here. Pretty much oil is outside of the Fed's control. That's why depending on what happens, and I'm really curious towards what Powell is going to say, but oil is going to put the markets in a weird spot. I talked about this on Friday. If oil runs too much, it is going to make the Fed have to decide between protect inflation or protect regional banks and a bunch of banks with a bunch of bad loans or unrealized losses. We talked about it. I think I have a short I'm going to get out to you for it, but essentially, oil right now is very important moving forward. I don't know if it's going to be a play-by-play thing every single day, but just watch as we get into the end of the year after the Fed, all of these meetings, if that begins to run, that could be very big. And even 92 this week, I will be eyeing that one. So watch out for oil. That is play number one. Then play number two, TSM. This one gets very interesting. They had a reaction on Friday. I'm surprised more people didn't talk about it, but pretty much TSM gave bad guidance for quarter two. They gave an update that just wasn't looking good with all of the AI hype, even the ARM IPO. It kind of came out of nowhere, but it wasn't a good sign. It even hurt a lot of the China stocks. Again, with a lot of the pressure we've been getting out of China, the iPhone bans, all of that. This was very interesting, but it had a lot of sympathy. So I would watch to see if this spreads anywhere else. I'm not in any other plays. I still got like my AMD, but other than that, I'm not in TSM. I'm in Baidu and JD, so I am going to be watching China plays. And like I said from last week, just be on the lookout because we didn't hear much out of China last week except for this TSM stuff, and not that many eyeballs were on this one, but this week we may hear a lot more out of China, so watch out for that. But that is play number two, and then play number three, I gotta go with Disney. And I think this one's going to be interesting because last week they had all of this news related to both ESPN, Disney Plus subscribers, again, the whole charter thing, but it was a nice move off of the bottom, and I didn't play it a lot last week. I did last time, but it moves so much. So really what I'm saying is watch both ways. Either it's going to fade this, or if this continues to get very vertical, it hasn't really had a V bounce kind of in a while. This was the earnings, but that didn't really last. This kind of looks more juicier, but it has to hold. And if it doesn't, it might get relegated back to the 80 and below gulag, and then we see what happens. But that's pretty much everything. Again, I will be eyeing the yen, and I'm going to keep my eye out for some of the bond plays as well. It really all depends on Powell. Maybe we just go back to trading trading some of the bonds. That could be very good on the day trades during Powell. But other than that, we got to get the answers, see where it guides us, because like we said, after this week and even after these next 2 weeks and this information in SEP from Powell, it's the end of the year and then it's 2024. So I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, the best is yet to come, but also the worst too sometimes. And what I'm saying is always be grateful for every moment. Trust me, even if you think it's bad, it could always get worse. You gotta focus on what you have, what's in your hand, and use it and make the most of it, baby. And that's what I'm talking about. And we have so many opportunities every day. So, Chad, let's take the most advantage of it. Let's get excited. Tomorrow's going to be a surprise. I don't know it's going to, you see what I'm saying? I don't know it's going to happen, baby. But get in the game. I love you. God bless you. I will see you there. And that's it. That's it, bro. That's it. That's not that awkward. I thought it's awkward. Can you see it? I chew on this sometimes. Maybe I might not. I'm not even going to look back and no, I'm going to leave. Horn.